Yesterday was the relief rally. Today is the reality check. The Dow surged 930 points on Thursday, best session in 2 months, after Trump called off strikes on Iran and claimed a great settlement was imminent. The S&P 500 closed at 7,394, up 1.75%. The Nasdaq jumped 2.54%. The Philadelphia Semiconductor Index ripped 7.91% higher. But that was Thursday. Here is what has changed since then. Iran has now confirmed the deal. For the first time in this conflict, Tehran is not silent. Iranian state media published a 14-point draft that includes reopening the Strait of Hormuz within 30 days. And Iranian officials have confirmed negotiations are in their final stages. Trump said the deal could be signed this weekend. That is new. And the market is now trying to figure out what comes after the deal, not whether the deal happens. So Friday is not following through. The S&P 500 is flat as I record this. The Dow is up about 0.4%, a modest continuation. The Nasdaq is down 0.5%. Tech is giving back some of yesterday's 640-point surge. The market is consolidating, not accelerating. This is what a buy the rumor, sell the news setup looks like in real time. The rumor was Thursday. The news is the actual signing. Until that happens, the market is in a holding pattern. Let me talk about the big story that is happening right now. SpaceX began trading on the Nasdaq this morning at approximately 9:50 a.m. Eastern. The ticker is SPCX. The IPO priced at $135 per share, raising $75 billion, the largest IPO in history by a wide margin. The opening cross is currently in progress as we speak. Here's what we know. Oppenheimer initiated coverage this morning with an outperform rating and a $190 price target, roughly 40% upside from the IPO price. Total investor demand exceeded $250 billion, making the deal more than 3 times oversubscribed. Retail orders alone topped $100 billion. The gray market and crypto derivatives have been pricing SPCX around $173 before the open, implying a 28% first-day pop. But the actual opening print depends on how the Nasdaq cross-auction clears. For an IPO this large, the first trade can take 30 to 90 minutes to establish. The key number to watch is where SPCX closes today. A close above 135 signals that institutional demand extends beyond IPO allocation. A close at or below 135 would suggest the initial buyers were mostly flipping shares. Now here is the part that is getting less attention but matters more for the next quarter. OPEC released its June monthly oil market report yesterday. The group cut its 2026 global oil demand growth forecast to 970,000 barrels per day, down from 1.17 million in last month's report. That is the second consecutive downgrade. The stated reason is weaker demand in India and the Middle East. The unstated reason is that the Iran war has destroyed normal consumption patterns in the region. OPEC estimates Middle East oil demand in March, the first month of the conflict, was roughly 500,000 barrels per day lower than a year earlier. But here's the counterintuitive part. OPEC also raised its 2027 demand growth forecast to 1.73 million barrels per day, up from 1.54 million. They expect a strong rebound once the strait reopens and the regional economy stabilizes. The OPEC view is that this is a disruption, not a structural shift. That matters for the oil trade. If you are short oil on the peace deal, the OPEC downgrade supports your thesis in the near term. But the 2027 revision suggests the medium-term demand picture is intact. Oil at $85 may be the new equilibrium if the strait actually reopens, not the start of a crash to 60. The PPI data from Thursday reinforces the same story I covered yesterday, but with one new twist. Headline PPI at 6.5% is ugly. Energy drove 80% of the move. But when you strip out food, energy, and trade services, the core PPI accelerated 0.8% month over month, the largest increase since March 2022. The annual core measure hit 5.1%, the highest since October 2022. That tells a more worrying story. Yes, energy is the headline driver, but there is now evidence that the energy shock is bleeding into core producer costs. Plastic resins, industrial chemicals, transportation, all up. That is how an oil shock becomes a broad inflation problem. The Fed sees this, and it reinforces why rate cuts are off the table at the June 16th and 17th meeting. Let me give you the scorecard for the week and what I am watching into the weekend. The Iran deal has gone from rumor to near confirmation in 48 hours. The market has already priced a significant portion of the resolution. The next leg higher requires a signed deal with a verified timeline for the Strait reopening. Until then, expect consolidation. SpaceX is the single biggest sentiment signal for risk appetite. A strong debut supports the rotation into growth and tech. A weak debut would be a canary for the broader IPO market. OPEC is telling you demand is softening now, but will snap back in 2027. That is a medium-term bullish signal for energy equities, even if crude pulls back on the peace deal. And the PPI data is the reason the Fed cannot ride to the rescue. The market has to stand on its own without rate cut expectations. I am watching 3 things this weekend. 1. Does Iran actually sign the deal? 2. Where does SPCX close on its first day? 3. Does oil hold above 85 or break lower? If you are trading Monday, the range is defined. S&P 500 support at 7,250. Resistance at 7,450. A deal signed over the weekend tests the upside. A stall or delay tests the downside. Position for the move, not the headline. I am Daniel Reed. Keep your data sharp and your logic sharper.